Last week, the New York Stock Exchange announced that it entered into an agreement with MSCI to become the U.S. options listing venue for benchmark MSCI indexes. These offerings will be listed on NYSE Arca and NYSE American options markets. Well, joining me now with more is George Harrington, Global Head of Fixed Income and Derivatives at MSCI. George, welcome.
Thank you very much. Glad to be here.
Yeah, great to have you here at the Stock Exchange. And I want to hear from you as to how this agreement complements the existing partnership between MSCI and ICE.
So MSCI and ICE have been partnered for over 20 years in the derivative space, with the main focus having been historically on futures and our futures products. We've been working very closely with the NYSE options team over the last year about the potential to have our options listed on the NYSE option exchanges. We certainly see the benefits of having the futures and options underneath the ICE umbrella, which will allow for cross-margining between the products. And because ICE is the home of the EM and the EFA futures, which are two of our most active, most liquid traded, we think there's incredible potential for product development on the option side.
Which benchmark indexes will be included as part of this agreement?
So EM and EFA, as I mentioned, are the two ones where we expect the liquidity to really focus. But we're also including our MSCI USA, our All Country World Index, our MSCI World Index, and we also have the potential for additional listings down the road. So this is just the beginning of what we think is going to be a really exciting partnership with a great potential for much more listings as we go into the future.
I'm excited to see how it unfolds. Why is now the right time for this?
There's been an incredible interest in the U.S. options market over the last 5 years. You've seen the institutional participation really start to pick up, but also retail has become a major factor in driving evolution in options, going from monthly options to weeklies to even daily options. So there's been incredible evolution that's been developing. We basically saw that was a real sort of harbinger that the time was right to really focus on the potential for options. We also see a tremendous amount of synthetic activity, so basically OTC options that are being traded, and those have even further potential to be moving over to the listed options here on NYSE.
What benefits do these options provide investors?
So the index options have very specific benefits that we think really will appeal. First off, they have a tax advantage, versus other options in the marketplace. So we think that's really important. They settle in cash, so you don't have to take physical delivery with option expiration. And then most importantly, because the futures, again, that are listed on ICE, and now with these NYSE options can cross-margin, the capital efficiency with these new NYSE options is incredibly high. So we think that will be a major driver of increased participation as we get them up and running by the end of the first quarter with the first two with the EM and EFA, but then a larger slate as we go further down the road.
And you teased this a little bit earlier, George, but talk to me more about how this agreement enhances the long-term collaboration between MSCI and ICE.
So what we've basically done is we are trying to look at all of our agreements that we have, with ICE. We're looking for a very long-term partnership across futures and options. This really, we think, sets us on a very good path for further product development. We work with ICE today all over the world. We have partnerships in obviously here in New York and Chicago, but then those extend to London, to Abu Dhabi, to Singapore. We think that this is going to be another major step in terms of focusing our U.S. franchise here, but then also, making that part of the portfolio of the global MSCI ICE derivative franchise.
How did feedback that you received from investors and market participants shape this initiative?
So we've been doing quite a bit of due diligence over the last year, or even a little bit longer than that, talking about what are investors looking for, what will spur them on to basically follow on the path of the great success that we've seen on the futures franchise. How do we translate that to options? Clearly, working with NYSE and the NYSE partner exchanges was the number one ask. Again, I keep going back to the cross-margining, but the capital efficiency around that is incredibly important. So we feel very strongly that will be a driving factor. And then, of course, the other, the tax advantages that we mentioned before. But cross-margining is the big win here. And again, because people will be able to go in and they'll be able to work with their prime brokers and be able to trade futures and options and have them offset, we think that's a major factor in success.
George Harrington, Global Head of Fixed Income and Derivatives at MSCI. Thank you so much for joining me here at the Stock Exchange.
Thank you.
Great to have you.